Thank you for checking out Fieldman, Rolapp Associates Municipal Market Update for the week of November 1st, 2021. My name is Adam Bauer, and I serve as CEO and President of Fieldman, Rolapp Associates. Fieldman, Rolapp Associates is a municipal advisor to government. On a bi-weekly basis, our firm posts what we call the MMU for Municipal Market Update to try to keep you current on the municipal bond market. On our first slide, what we show is the AAA MMD yield curve. As a refresher, AAA is the highest rating an issuer or municipal issuer can achieve. MMD is the municipal market data yield curve. And they post where interest rates are for years 1 through 30. And then you can see at the bottom of that chart, we have in 5-unit increments, we have years 1 through 30 listed. To the far left, we have interest rates. And what we're showing here is if you look 5 years ago, the red line represents that MMD yield curve from years 1 through 30. And hopefully what you're noticing is there's a bit of a slope to it, which is in contrast to what we've seen for the last year or so. For the last year or so, if we go back 1 year, you can look at that black line. And on that black line, hopefully what you notice is an extremely flat yield curve years 1 through 5, a escalated yield curve years 5 through 10, and then flat all the way out to 30 from that point on. Now, the light green line represents currently 2021. And I think what you'll probably notice there is years 2 through 10 have lifted off of where we were 1 year ago. So investors requiring more yield to loan during those years than they have in a year or so. But then years 10 through 30, it really starts to level out. And so we still have a relatively flat yield curve, but the years kind of 2 through 10 are a bit higher than they were a year ago. And that's important for this next chart. This next chart we show here is, once again, interest rates to the far left, years at the bottom, MMD, AAA that we're talking about here. In this case, the gray bars represent where interest rates were, where they've ranged going back to 2005. The red line represents where the MMD is as of 10/29/2021. And so you can see we're still relatively low. Hopefully we're also noticing years 2 through 8 or 9-ish, it looks like we're a bit off of that bottom more than we are in some other years. And that's where you saw that upward trend in interest rates. But if you go back to the last time we recorded this, when I showed you the 1 year, we're at 0.15 today. We're at 0.12 2 weeks ago. On the 10-year, we were at 1.17 2 weeks ago, and now we're at 1.21, so a little bit higher, 4 basis points higher. But now if we go out to year 20, we're at 1.48 2 weeks ago, and now we're at 1.49, so just 1 basis point higher. Now, if we go all the way out to year 30, 2 weeks ago, we're 1.69, and today we're at 1.69, so exactly the same for 30 years out. And that really helps illustrate how that front end of that yield curve has had some increases, but on the long end, not so much. Now, going ahead, how are investors still investing in municipal bonds? We still have inflows into municipal bond funds, and that's what you see with these green bars. Red bars represent outflows. And hopefully what you notice is that green bar to the far right is a lot smaller than some of the other green bars. So we still have inflows, but not to the same degree. Now, it's all about supply and demand. So this is our demand side. What about our supply side? Our supply side shows an escalated weekly average volume over the last several weeks, but then this week actually has slightly below that. And so hopefully the fact that we have a little bit less demand, we have a little bit less bonds, that all balances out and rates stay low for our issuers. On this side, we compare the 10-year US Treasury to the AAA 10-year MMD. And I've talked a bit about how that 10-year Treasury just seems like it kept drifting upward. Well, that trend has reversed. And now we have the 10-year Treasury that has drifted downward in a pretty aggressive fashion there. And the MMD never drifted up as much as the US Treasury and hasn't drifted back down either. It's kind of stayed pretty stable there. So we'll see what happens over the next few weeks. If that 10-year Treasury continues to drift downward, I suspect that'll put some pressure on the MMD downward as well. We have the economic calendar here. As I've told you in the past, should these items come in dramatically different than expected, it'll certainly have an impact on the markets. On our last slide here, I've highlighted the Fieldman, Rolapp Associates registered missile advisors. I encourage you to reach out to any one of these members of our team for additional information. But in the meantime, I thank you for your time, and you should see another recording from us in about 2 weeks.